What is my most profitable strategy? What is the best trading Forex strategy? Well, if you're a beginner or not, it needs to be three things for me: simple, easy to spot, and repeatable. In this video, I'm going to teach you three simple trading rules which you can go away and start practicing today, and we're going to talk briefly about the technicals and the psychology behind it, as well as showing some examples on how to test it. Now, the question, what is the best trading strategy, can have different answers depending on who's asking and who's answering. You should probably be looking to build a strategy which works around your life. So for me, it's a strategy which means I don't need to look at the charts all day. I have a life outside of trading, and I cannot be at my computer all day checking the charts. I'd like it to be simple and not have a million things to check off the list before taking a trade. I would like plenty of opportunities to take a trade, not something which comes around once every couple months or once a week. And for my psychology, I like one with a high win rate. I don't like the idea of having big consecutive losing streaks and being okay with that. So that's what I wanted, and I've built a strategy for myself around that, and it's working pretty well. Before we carry on, I have a link to a free Telegram in the description where I share all my trades, everything I'm taking and doing, and it's all around based off this strategy. If you've been following me already, you'll know that how I like to trade, like swing trade with daily charts and H4 zones. But again, I share all my analysis and the trades I'm taking for free in Telegram below. So in a nutshell, what my rules are and how I approach it is I like to find clear daily zones above and below price. Now, the time frame can depend on how frequently you want to trade, but the reason I use the daily zones is because it has the most amount of volume there. Everyone that trades on time frames below you is going to see these zones, whereas if you decide to take zones off the 15-minute, well, people above the 15-minute, maybe the 30-minute might see it, but if you're in the hourly or the H4, they're not going to see the zones that you are seeing. So by using daily zones, you have a much more spectrum of traders trading on these zones. So that's rule number one: find a clear daily zone above and below price. I then set alerts at these zones, and then when price gets there, I stop and watch it to see if the structure is continuing or changing. If price gets there and the structure is starting to change and it's starting to bounce off the zone, then I will enter a position in the direction of the bounce. However, if structure is not really changing, even though it's got to the zone and it's starting to break through the zone, well, then I'll look to place a position. The strategy is known as a break and retest, but a position in the direction of the trend to continue. And I use these zones really as like a place of controlling risk and where you place your stop loss. It also gives an added bias that there's these daily zones where loads of volume's happening. It's another reason why price may bounce there and these zones may be respected. Okay, so I'm going to go onto the chart now and we're going to show you exactly what it looks like. So here we are on Euro New Zealand dollar. I've placed zones above and below price, and simply I just have alerts set here. The platform I'm using is TradingView. That's something I won't go into today and how we use, but a lot of people are familiar with it. When one of these alerts go off, I'll then look at the chart and make a decision from there. So I'm going to use this arrow tool to show you exactly how it would work. So let's just say price goes up and it triggers my alert and it's there. I then stop and I mark the chart and I keep an eye on it. And typically I then drop to an H4 chart, right? And you know, this arrow, we're pretending price has got here. Now, if the trend of this uptrend is continuing and it's making higher highs, higher lows, I don't enter a sell. Okay, there's no reason to, other than it's got to a zone. That's not a good enough reason for me. And if this happens, this is known as a break and retest. Well, then once it's broken the zone for a few candles, and specifically if a daily candle is closed outside the zone, I'm then looking to see on the next lower high, can I enter? So for example, it'll be something like, you've seen this make this lower high. Once it starts to pull off again and it's still respecting the structure, I would enter something like this. And I would typically have my stop below the zone, typically. Okay. Now, of course, there's exceptions to the rules for everything, but that's one. That's the break and retest. The other option is when it bounces, right? So price gets here, and you know what? It actually does start going sideways, and it's not doing anything. Still not good enough for me to enter a sell, but let's say it starts to make a lower low, and a lower high, and a lower low, and a lower high. Well, and then now, all of a sudden, it's reached to a daily resistance zone, and the H4 structure is showing the downtrend is starting. So as soon as this downtrend starts and it breaks and makes a new low, my position would look something like that. And I like to go for a 1-to-1 risk to reward. Now, the main reason I like the 1-to-1 risk reward is because it gives you the highest win rate possible. And for me and my psychology, and I don't want to have these big losing streaks, and I like to keep up momentum, this sits very well for me. Also, going through my journal, I learned that a 1-to-1 risk reward was the most profitable for me. This could be something I may look to change in the future, but for now I'm very content with how it's working. So the technicals that I like to look for is I love to see the trend, and then I drop to H4 and I take a closer look from there. And I like to make it, you know, I want it to be clear and obvious what the trend is doing. So we find the daily zones, then we drop to the H4 when we get there. Now for you may want to do this on a high time frame, a low time frame. The time frame is not as important. As I've said, the daily zones are typically the most respected zones, but whatever your work commitments are, your lifestyle, you may want to trial this in different time frames. But I like to wait for super clear and obvious setups. So sometimes I will take one trade in a week. Sometimes I may take 4 or 5, just to give you an idea of how frequently the trades are. But remember, you make money when you win, but you also make money when you don't trade at all. You need to take trades on, the best setups. If you're over trading and just trading for the sake of it, well, it's going to, really wreck your profitability. So now I'm going to talk briefly about the psychology of it. So after a lot of backtesting and forward testing, I've worked out that these 2 rules really changed it for me. One rule is how I like to use a one-to-one risk reward, why I outlined a minute ago about how I like to keep a high win rate. The other rule is that I now very rarely manage my trade. Once I've entered the trade and I've set my stops and my targets, I leave it alone. So typically, trading blind with no strategy with a one-to-one risk rewards typically will get you a 50% win rate over the long run. Now you add this with some strong support and daily resistance zones and some trend structure, you can maybe get this 50% rate up to maybe 55. With a one-to-one risk reward, anything over 55% win rate is pretty good in my opinion. And as for the trade management rule about letting the trades play out, well, that's all part of it. You need to let these statistics play out. The more you add to a trade and the more rules you have, the more the statistics may not play out and it may be a bit more random. You want this to be quite repeatable. I'm not saying that you shouldn't have a trade management rule, it's completely up to you, but that's what works for me. So doing that with a one-to-one risk reward, you can often get a 50 to 55% win rate with some good trading. Now, I hope that can maybe reset your expectations. A lot of gurus give off the idea that they're just winning. I don't believe that at all. And once you go into this with very realistic expectations, then all of a sudden the losses, the wins, you're a lot more stoic and a lot more level-headed, and that's exactly how you want to be emotionally when trading. So what makes this strategy so repeatable and simple? Well, you're not waiting for 100 different things to line up. There's 3 things we're looking for, okay? Clear zone, price to get there, what's the structure saying? That's it in a nutshell. Again, I'm going to go into some examples in a minute. We're going to do some backtesting and show how it works. Now, spotting good zones and the trends, that's something which takes a bit of time, but also spotting clear daily zones it's very simple and straightforward. It shouldn't take long to get quite good at that. Key levels can be very easy to spot. Now, for those of you that are in my Discord channel, I have Sam's Effect Society where we have group calls, we have, there's a Discord server, we chat, I share all my trades live, like instantly as soon as I take them. There was recently a training video just for those paid clients only. If you're interested in that, there's a link in the description, but there was a video for those paid clients where it specifically showed how I like to draw zones on different time frames and how I don't only use the candlestick chart for zone drawing, and I've had a lot of great feedback about that. Another thing that makes it simple though is I personally don't use things like scaling in or hedging. I don't think there's anything wrong with that, but it can add sort of a complexity to it, and especially if you're a beginner, you don't need this added like option and decision making. You want it to be quite straightforward and simple to start with. So we've got a simple process of 3 trading rules. Find a chart where it sets up, enter a position, walk away. The idea behind it is that you have these solid daily zones acting as like a buffer because your stop loss will be on the other side, and you've also taken the trend into account and you're going with the trend. Those 2 things can, there's real 2 strong biases that can lead to good profitability. And the more experience you have with the strategy, the more it becomes second nature. You will start to ignore the bad and dodgy setups because you've seen them before, and you'll just start to take the good ones. And that's the place where I'm at now, where I'm probably trading less than ever, but this is the most profitable I've ever been in my couple years of experience now. Now, before we go into some examples, I'm just going to say how I plan the trade. So firstly, really patience. Like, I can find a zone on the daily chart, a super clear zone, but price may not get there for 2-3 days, a week. And then once it gets there, my alert's triggered. Well, it may not set up, and I may not be happy to enter for another day or 2. But this is more because of the time frames that I choose to play on. However, because I trade all Forex majors and minors, I'm never really very short on setups. And in fact, if you look through my Telegram, you'll see every morning there's multiple pairs to choose from. There's lots of analysis every single morning. Okay, so here we are. We're going to do a bit of backtesting now, and I'm going to show you a few examples of how it works and how I look for the trade. So we're here on Euro New Zealand dollar on the daily chart. Now I'm just going to make this really small. I'm going to go down so I can't see it. We're going to go back a bunch, back to, where should we go back to? Here we go, December 2019, and we're just going to hit replay. Okay, and now from here we're going to start trading. So I'm going to draw up some zones. I'll probably cut this up a bit because otherwise it'll be quite a long-winded backtesting session, but I'm going to find zones, play some trades, and show you and talk you through it. Okay, so we found these 2 zones. We're now just going to fast forward it, and we're going to stop when we get to one of these zones. Okay, so price has reached this zone, and it's broken it a little bit on the daily, so we're going to drop to the H4, and we're just going to see what it's doing. So at the moment, it's going sideways. There's still a chance of rejection and entering a sell, but I'd like to see a bit of change in structure first. Okay, there's no change in structure. It's continuing to go up. It's broken the zone. Ideally, I would have liked for this low to come a bit lower because that would have been a much better entry. But it's made its new low and it's starting to take off again. So we're going to enter some buys here. My position would look something like this with the stop just below the zone. This way as well, it gives you like a second option because firstly you're entering here because the trend's going up. But if price comes back to the zone, a lot of people will also be entering buys purely because price is at a strong daily zone. So you've got two chances here of making the trade work out. Two reasons. Okay, so there we go. So there's a bit of volatility, but it made a win. Okay, so we're going to place a couple of trades. We're going to say we've got a 1k count and we're just risking £50 a trade. I think this is probably quite realistic. Probably quite a lot of people can afford to trade like this, so we're just going to go from. So now this trade's happened, we're going to go back to the daily zone. I need to spot some more zones if possible, and we continue to trade. So there's nothing above price really right now. These zones are so far in the past, I would ignore them and wait for some more recent structure. Okay, so when price is starting to go sideways a bit and not show super clear structure, it's fine to spot zones which are slightly less clear on the daily, like this. You can argue this, like this is a zone, like you drop down to H4, this is going to be looking fairly okay. Okay, so my next trading opportunity is here. So we found that mini daily zone, we've dropped to the H4, it's now got 2 data points, which means it's a solid zone. So up past this point it's not a solid zone, but once it's had 2 interactions, it is. We've now had some rejection, and I'd like to see if it can start to make a lower low. Okay, I'm going to enter sales here because overall price has been now downtrending for a while. And here it's rejected it once, made a higher high, but now it's made its lower low. Even though this candle was super small, this one here, it's still now made a lower low. So we're going to risk it, a chocolate biscuit. Short position, stop on the other side, 1-to-1 risk to reward, and we're up. Okay, cool. So that's another plus 100, plus 50, sorry. Okay, so we're going to do one more trade here. Price has come up here and it's come to a resistance zone. So we're going to see drop to the H4. And we're going to see if it starts to reject and make some downtrend structure, we're going to enter sales. If it starts to break through and the uptrend structure continues, we're going to look at buys. Okay, so the uptrend structure has continued. If we can get a mini pullback, I would like to enter a buy. Cool, so we're going to enter a buy here. Admittedly, it's not the best entry now, but we're going to take it. So stop just below the zone, 1-to-1 risk to rewards. As long as this trend continues, which is 10th of July to the 31st of July, 1st of August. So, 20 odd days or so, 3 weeks. As long as this 3-week trend tends to continue overall, we're going to be in profit. Okay, there we go. And it's another winner. So, overall 3 trades, that was actually a 3-trade win streak, which I've experienced quite a few times. I'm actually currently on my live account. I am in a 3-trade losing streak, and something that I've played around with is increasing risk after several losers. This is not something I recommend and not something that's part of the strategy. It's just something I'm trialing. I've gone through my journal a lot and I've worked out I've never ever had a 5-trade losing streak. 4 has been the worst I've ever had. So I play around now with if I have a 3-trade losing streak, I begin to increase risk to make the losing streak smaller. I don't increase risk like martingale, just increase it a little bit. So the losing streaks are not so bad and the winning streaks are good like this, like 3R here. But hopefully from seeing those trade ideas, you get a clear idea of how I trade and how I look for it and how simple it really is. It's just a few rules to master, and the more you backtest it, like I just did there, if you can collect data on it and get some spreadsheets going and see what's working, what's not, start to track little things, the more experience and intuition you build, well, you're just on your way. This is a strategy you can take and go away with today. I'm going to write the rules exactly in the description and you can feel free to use them, tweak them, make them your own. Maybe you want to do different risk to reward or a different sort of risk structure, but you can take this and start backtesting straight away. So it's find clear zones. What does price do when it gets to the zone? If it breaks, look for a retest. If it bounces, enter a position in direction of the bounce. Use a 1-to-1 risk reward. That's pretty much it. Of course, there's other things like news events and stuff which you've got to watch out for, but yeah, all those little extra things, like I post news events as well on my free Telegram, so feel free to follow that. And if you enjoyed this video, I'd love it if you could drop a comment or a like or whatever and just tell me how it's going and if there's any video you want to see next time. So yeah, cheers.